Oil Technical Analysis, October 20th, and looking at the Wednesday session, you can see that we did have a very bearish candle with relatively strong volume just below the $90 mark, which we have as pretty significant resistance at this point in time. The range is actually starting to fluctuate and get quite wide, down to about the 70 to 75 mark to 90, which is quite wide for oil. Oil typically will trade in $10 increments. We are at the upper end of this range, so selling is an option, but buying just isn't going to be until we get that daily close well above the $90 mark. Looking at the Brent markets, a little bit different story here, where we are at the top of the range, which is, for lack of a better, it's kind of sloppy, but lack of a better way to write it out, the top is 115. We had a hammer that appeared for the Tuesday session, and the thing about hammers is they quite often are very supportive and very bullish signs, but at the top of a up move, it means one of two things. It either means that we're about to get an acceleration to the upside, which is very unlikely with this parabolic nature of this move recently. To expect it to do the same thing again is probably stretching it. But hammers, when they get broken to the downside, and this one did just barely, but it did, is actually they are actually known as a hanging man, and a hanging man is a very very bearish signal, and we did get that, albeit just slightly, during the session for the oil markets on Wednesday. So, having said that, it does look rather bearish. A break of the Wednesday candle should send this back down, and truthfully, that's the direction we want to trade. So, if we get that opportunity to short below the lows on Wednesday, we would be very interested in going in that direction.